Hello, it's Robert Miner with Dynamic Traders Group with this week's relatively short video for our YouTube subscribers and our Twitter followers, where every week or two we do a video that it's both educational as well as we're looking at current markets and potential trade opportunities. Haven't done one of these for a couple of weeks, so we're going to update a few of the markets we look at on a regular basis, including the stock indexes, gold, the dollar, and maybe one or two other ones. And one of the reasons I think it's pretty important that we want to be aware of the position of these markets and the potential trade opportunities is because I think we're in a time period with some major reversals are in the making right now. Before we get started, there's something I want to mention to you. This Monday, December 19th, is the final day of the student intake for my Dynamic Trading Master Course. If you haven't been to our website and read about this, check it out at dynamictraders.com on the DT Education page. But this is the last date that will accept students. Until mid to late January, we'll have another student intake then. But what you might be interested in now, if you really want to learn a trading plan, is that through Monday, December 19th, there's a 25% discount available to anybody that wants to register by the end of the day on Monday. Or for the first time, we actually have a payment plan where you can put partly payment down and then pay us over the next couple of months afterwards. Now, this is an almost 30-hour step-by-step trading course. It's practical Elliott Wave. It goes way beyond simple fib time and price targets and multiple time frame trade strategies and basically trade strategies from entry to exit. Well, you can read all about it on our website at dynamictraders.com. Also have a link for that down below on the education page. So you might want to check that out if you really want a complete how to trade program using the types of things that you learn in these videos that we do for YouTube and Twitter. Okay, that said, let's begin by taking a look at the S&P. So this is the weekly SPX data, and if you looked at the video and watched it from 2 weeks ago that I did for the YouTube channel here, you know we focused on the stock indexes and gold and the dollar at that time also, and the basic bottom line of that video was we were probably within about a week of completing a weekly high, which had the potential to complete a correction up from this October low. The ideal week to complete it was 2 weeks ago. That's the week ending December 9th. Well, look what happened the following week. So by the way, the weekly closing high was that week ending on December 2nd. And then we had a down week the following week, and then of course the high was confirmed this week. What's important about this? If you've watched these videos in recent weeks, you'll know that I've noted over and over again that a weekly close on the SPX below 39.01 indicates not only that a weekly high is complete and the trend ought to be sideways to down for 2 or 3 weeks, but more importantly, that indicates that this advance off the October low should be a correction. What follows a correction? Real simple. A resumption of the trend prior to the correction to a new extreme. That would indicate that more than likely the stock indexes are going to continue net bearish for some time, probably more than just a few weeks, and probably eventually continue below the October low. That's an important piece of information, particularly because we're only a couple of days into the resumption of that bear trend. So more than likely, stock indexes will be sideways to down for some time to come. Here is the daily data of the SPX, and again, it shows near the end of last week is that the SPX closed below even the daily closing high of what I got labeled as wave A. That indicates this is a correction. By the way, that's something, it's called the closing overlap that I got a whole section in the master course about. It's probably one of the most important guidelines that you can use to help you discern whether a market is in a trend or a counter trend and whether it's in a position to complete a counter trend or not, depending on the circumstances and the basic wave structure. But what's really something important to know about. But here we are, we're just 3 days off of the double top. And as I mentioned with our DT Report subscribers, is that the catalyst that would probably complete this correction and this weekly high would be this right around the CPI and the Fed announcement, which was last week. For very unusual that they were just one day separated, December 13th and 14th, and boy, that was it. Exactly what occurred. We suspected at least that that was going to happen because the technical position, the timing, the price, the pattern, the weekly momentum, dual look-back momentum position, all warned that a weekly high was near, and that we were very close from this swing high, and an overlap would indicate this was a corrective advance, which would probably be followed by a new low. That's the kind of stuff, by the way, we teach you in the master class to be prepared for. So that's basically the bottom line of the stock indexes for now, is that likely to be sideways to down, not just for several weeks, maybe even much longer, but the immediate trend for two to 3 weeks sideways to down. That's some information you can use because it looks like we're just at the beginning stages of the resumption of that bear trend, so you can participate with minimal capital exposure. You notice I say all the time, more than likely, probably, because there's no, we don't forecast, we identify conditions with a high probability outcome, and the stress there is high probability. Well, I would say it's a very high probability that the trend will continue net bear, but boy, one tick above last week's high, and you don't want to be short. But there's all kinds of opportunities with bear ETFs, with futures, with options, etc. Please take advantage of this. So this is the dollar weekly data, and also I featured it a couple weeks ago in our video. And by the way, I do these updates now and then on our Traders News membership site at dynamictraders.com, which you can join for absolutely no cost, no charge card, nothing. We just want your email so that we can give you a notice when we put some updates there. Wednesday I did updates on some of these markets on Traders News. So you would have been prepared for some the decline in the stock indexes and the reversal that I'm going to talk about in gold in a minute, if you had been a member of our Traders News and gotten that update last Wednesday. Okay, this is again the dollar weekly. I talked about it a couple weeks ago, how it was probably coming near the position to complete what we call a weekly low, which had the potential to complete a correction off of the September high. Well, as of the end of this past week, the dollar index, while it did poke down to a new low here in this past week, it's had higher weekly closes than either of the weekly closes of 2 weeks ago. So it's what we call, more than likely, it's working out a significant weekly low, which may turn out to be a corrective low and a wave 4 low. We won't go into that details and why it's in a specific position to complete a wave 4 correction, but at the least you should be aware that the dollar is in a position to complete a weekly low, so you want to develop specifically get long trade strategies, because right now it's at probably just a few days off of that low. Here's the dollar daily data. And again, coming into this low, it's a few days beyond the ideal December 9th date to complete that low. The low is, so far at least, was Wednesday the 14th. We have our weekly and daily momentums, our dual look back bullish. So the signal that the low is complete, it's a ways above the market. To close above the November 25th close. That confirms the weekly low is complete, and should the dollar continue to advance and make a close above the October 4th close, that would confirm that this was a corrective decline, and eventually the dollar should continue to a new extreme and a new high. If you're a subscriber to our DT reports, I'd encourage you to check that out. A couple weeks ago, we did a dollar, euro, Bitcoin update on the longer term trend, and there's something very dramatic that may be occurring in 2023 you might want to be aware of. So you might consider also a subscription to our DT reports and or learn how to do this yourself with our DT master course. So we're probably in the very initial stages of at least a weekly low, maybe even a monthly low, and a major corrective low for the dollar. So this is the dollar weekly, and again, a couple weeks ago, anticipated that the week ending December 9th, not this past week, but the week before that, would probably complete a weekly high in gold, and then gold would be sideways to down for a few weeks, potentially to a new low. But that's not, that's a probability, but not a real high probability yet. But the odds of completing a weekly high were very high indeed. Well, this past week, gold did make a high during the week, but then ended up closing, we call this a two-close bear reversal week. So this past week made a new high, but then it closed below the closes of the past 2 weeks, and it made finally a dual look-back bear reversal in our weekly momentums. So again, we can look at a market that's in a position or nearing a position for making a reversal, completing a trend or a counter trend, but then we have to identify the specific market activity that's the initial signal that that reversal has been made, and then a trend continuation signal that the reversal is going to continue and there's going to be follow through. So this is the daily data for gold, and again, on Thursday, gold made that initial signal and was a setup for a specific trade. And that was that close below the December 12th close. So a very significant position. And again, is gold going to continue lower? More than likely. All the technicals from every perspective we look at it says that's the probability that gold will be sideways to down for 3 to 4 weeks. But boy, you got to have the trade strategy with acceptable capital exposure, and unless you're wrong. There could be a news event. It may just continue beyond typical technical extremes. So, of course, the stop is no further than just above last week's high on any short or bear market type of trade setup for gold, silver, or the GDX. Well, that's it for today, folks. Please, if you like what you learn here, subscribe to this YouTube channel so you get notified when we put up new YouTube videos, and go to dynamictraders.com and join our DT Traders news, where we have other updates more frequent than we do with YouTube or with Twitter. And of course, remember, Monday, December 19th by midnight, that's the last time that we take student intakes for our Dynamic Trading Master Course for 2022, plus the 25% discount expires and the prepayment plan, or the partial payment plan expires. That's it. I hope you have a fantastic holiday period. I'll be back in a week or 2 weeks with another video, so stay tuned. Take care. Robert Miner, over and out for now.